Nigeria's central bank governor there, Olayemi Cardoso, taking questions from journalists. Well, just before that, he did announce that the committee was unanimous in its decision to hold policy. The MPR was retained at 27.50%. The committee retained the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. The committee also retained the cash reserve ratio of deposit money banks at 50% and for merchant banks at 16%. And finally, the liquidity ratio was retained at 30%. So all parameters left unchanged. You're still with me in the studio, Bismarck Ruwane, CEO of Financial Derivatives, Nnamdi Wizuko, Managing Partner at Commercial Partners, and Gregory Croston, Consultant on African Economies and Finance, joining us remotely. Thank you so much, gentlemen, for your time. Bismarck, the governor said a lot today, but let's start with what your three key takeaways were. Very briefly, please.
One is that we need some time between when policy is announced and when you get the impact and get the results. Two, that they're watching things closely and that the global uncertainty, even though dissipating, is not totally eliminated. Three, that investors are looking for stability and consistency, and that is a driver. That is what is actually pushing this central bank, and they're not going to be swayed by short-term sentiments. I think that's the message. So basically, stability, an attempt to build confidence, and three, making sure that the difference between the apparel market and the official market is as narrow as possible. That's all.
Right. Nnamdi, your key takeaways, briefly.
One, I'll say things seem to be a bit more positive for them. Talked about positive balance of payments, narrowing gap effect in power markets, easing PMS. So things that are beginning to look a bit more positive than they were if you're going to look back maybe 6 months to a year ago. Despite that, still have a few risks and still need some help from the fiscal side with regards to FX earnings. And then finally, they seem to be really, really happy with regards to the net reserves. The fact that it's grown by about 20 billion, I mean, they kept harping on that, basically showing the amount of work that they've done to, sort of grow that number to something more positive and more manageable, which should give a lot more confidence to people. And it's obvious that they are really, really big on transparency.
Right.
Unlike what we had in the past, which they believe will help build investor confidence.
Right. Gregory, let me bring you in here. What are your three key takeaways from all that the governor said?
Okay, thanks, Esther. Well, first one, as expected, no change. Governor says they're on the right track. Q4 GDP was good. Let's wait for Q1. Let's also wait to see how broadly based it is. Second comment is there's a reference to measures to boost food supply driven by the federal government. Well, agriculture output figures suggest otherwise, I have to say. And it's not quite clear, there's no formal information, but how poor the insecurity is. Next point is about, I'll make the point about the global environment. So the governor says, yes, it was very bad, it's slightly better. Let's just hope, though, this is, if I may say, that the Nigerian authorities aren't going to parrot some of President Trump's sort of Liberation Day type statements, because you can see as soon as the US government has rowed back from these statements, in part at least, then people's jitters are eased. And those are my three comments. I'm going to add a final one, remittances. Have a look, see what Bangladesh and Pakistan have done, because they've been very innovative. Thanks.
Right. Before I go to Bismarck, I wanted you to quickly comment on a comment that the governor made around with the fiscal authorities. He did say that the committee is concerned about the drop in oil prices, and it says that this presents new challenges for the fiscal authorities as a fiscal receipts and budget implementation for the fiscal authorities. Now, we know we have a 54.99 trillion budget with oil prices hovering around $64 per barrel. There's a question of how this budget will be funded. What are your thoughts on that? Very briefly, please.
Yeah, well, I'm thinking it's going to be a struggle. Well, one way you tackle it is that you boost revenue collection. And if you look at the revenue collection of the last 18 months, you'll see that obviously customs benefited from exchange rate, but you can actually see they have made quite a bit of progress on non-import VAT and on corporation tax, but that still leaves a huge deficit. So let's just hope that the treatment remains orthodox and we're not going to return to the famous ways and means.
Very good point there, Bismarck. I want you to also weigh in on fiscal, because the governor did say that there's improving synergy between the fiscal and monetary authorities, but we know that there's still some structural issues that are still lingering here and there.
I think there is coordination, but there's still misalignment of goals. So if your goals are misaligned and you actually coordinate yourself into the wrong destination. So I think there's still work to be done in terms of alignment of goals so that the goals and the timing of those goals are actually synchronized. The one important element I picked up was the question of the gross and net reserves. The number of net reserves, about the net reserves going from 3 to 21.3 billion is quite significant.
Right.
So that needs some analysis, but the reality is that that's a massive improvement, right? The question of that the audited accounts are out, and I think that itself is an improvement. Therefore, and the amount of cover, which is 7.6 months, is also comforting. 6 months is normally
right.
So,
right.
Generally speaking, good.
Okay. Now let me come to you. We have about 3 minutes left. I wanted you to comment on how all of this affects business, the Nigerian business, the typical Nigerian business, the small business in the private sector. Someone asked the question, asked the governor, yes, we're seeing inflation easing on paper, but, right there on the streets in the business, businesses are feeling the pinch, Nigerians are feeling the pinch. Businesses are borrowing at 30%. That's high. How do you grow a business with 30%? But the governor did say, look, yes, when we want to grow the economy or taking the economy off the ground, we need to, build confidence. Inflation needs to come down. Investors need to know that they can come in and go out, etc. All of this, there's a process to all of that. What are your thoughts in terms of, yes, that is true, but how that still impacts on business overall?
There's no doubt that high cost of funds will definitely impact businesses. Even though if you look at the scheme of things, FX is a bigger problem for most businesses than the interest rates. The period when we had very low interest rates, you can't really point to a huge growth in credit. Unlike, now you still have businesses able to come and borrow, commercial papers are being issued, credit to private sector is growing, bank balance sheets are growing, despite all the liquidity tightening and everything that's been done. So, yes, lower interest rates better, but between low interest rates and stable effects, because stable effects, volatile effects mean they're going to have higher inflation, which would naturally impact the businesses. I think it's a good one to have. The high interest rate for now, but eventually, central bank will have to start wondering how much the rates are affecting inflation and have to start looking at how to start to, cut down on that.
All right, we'll leave it there. But thank you. I must thank you for your time today. Thank you so much for sticking with us throughout the broadcast. Thank you for your time today. Well, I've been speaking to Bismarck Rwane, CEO of Financial Derivatives, Nnamdi Nwizu, Managing Partner, Commercial Partners, and Gregory Cranston, Consultant on African Economies and Finance, of course, being part of today's broadcast of Nigeria's Monetary Policy Committee meeting, where all parameters, including the MPR, was left unchanged.